Hi and welcome back to my morning report chart appraisals on Tuesday the 2nd of September with me, Richard Perry, market analyst at Tech Markets. I'm going to move on to sterling dollar now, and what a disappointment that has been for the bulls. They have just completely and utterly just ruined what had been the process of over a week's worth of base building process, and it just seems to have been absolutely scuppered overnight, really. The process of moving above $1.66 had taken, as I said, 7 or 8 days of testing up against the barrier, and then suddenly yesterday you saw a really strong breakout. Then it just drifted back towards the neckline. It started to sort of form some support. It looked like a fairly positive move, actually. That having got the pullback, you thought, okay, well maybe this is going to start to pull on again, and just overnight, the bulls have completely lost control and is actually been aborted as a base pattern, which is so disappointing. You've got this failure of the support at $1.6560, which we've seen in the last few minutes actually as the European trading has really got going, and that sort of now just aborts this pattern, which is a big disappointment for me because I've been talking about the process of this pattern for a while, and this big resistance at 66 that had been broken yesterday, thinking that maybe the bulls were going to be taking charge of a rebound, but no. On this daily chart, you've got 4 days in a row here of 4 days in a row of recovery, and you've not seen that of the bulls taking 4 days in a row of gains since the end of June, and that was well before this downtrend started. So that had me thinking that maybe there was something of a possible recovery going on at the moment. And no, it's just been completely turned around. I mean, it hasn't yet broken back below the low of 65.25, and you would argue that until that's really been seen, then you could argue that there is a neutral pattern moving on, in the fact that it hasn't yet breached that reaction low. But certainly, the disappointment is rather significant here. All these momentum indicators, this RSI had looked to be trying to improve. It's now turned back lower again. MACD lines had been looking to improve. They're now sort of drifting sideways once more. Stochastics are tailing off, and it's just rather disappointing, as I said. Now, in terms of how we're going to play this going forward, you've got, as I said, this 65.25 low. Whilst that remains intact, perhaps the bulls can start to rebuild. But if it does move above 66 again, then perhaps you could argue that there is something still in this, and it could become a bigger base pattern building process. But the breakdown that we've seen today, the disappointment, the dollar strength, generally across financial markets today, just all suggests that perhaps this pattern is going to be breaking back lower again, and we need to be careful. So I think for now I'd be standing aside whilst we wait and see how this works, because that $1.66 level could well become the resistance again, and it could well be that we're turning lower again. Look at these intraday intraday moving averages, are beginning to turn lower again. Momentum indicators also deteriorating on the intraday basis. So just generally, it doesn't look to be such a positive chart anymore. And yes, certainly the ISM number today at 3 o'clock could have an impact on it as well. But it looks like this recovery process has been aborted. Anyway, I wish you good luck in your trading today, and I will speak to you later.